What is up, traders? Every so often, the market gets really lazy and they can miss something really big. And right now, I think that's exactly what's happening. And it's creating a really big opportunity for us who are paying attention to get into some, currencies, metals, cryptos, and stocks. So what we're going to talk about today are the warning signs, kind of building under the surface of the market. The several assets that are sitting at very, very critical cycle points right now. We're going to break everything down into plain English. We're going to talk about the possible Fed cut rate here on December 10th. And lastly, I'm going to show you how I am positioning my stocks, what positions I'm in, and how I'm approaching this market for the next couple of weeks. So let's get into it. So the first thing we want to look at here is you can go to FedWatch, you can bookmark this page. This is showing right now that the market is pricing in that there's a 52% chance that the Federal Reserve will cut rates at their next meeting in December 10th. So you can look right here that the rates would drop. There's a 52% chance. But based on the macro backdrop, I think that probability should be closer to, 70 or 80%. We have labor data that has been increasingly weakening for the last 3 and 4 months. We have manufacturing that's still in a contraction in the market. We have credit card delinquencies rising. We have small cap stocks lagging. We have earnings guidance that are getting soft. The long story short here there are a lot of canaries in the coal mine right now that are showing that the economy is not as strong as we think it is. When the economy is not as strong as we think it is, that's when the Fed cuts rates to stimulate the economy. But the market is now pricing in that those rates might not get cut. I believe that the market has gone too far on one side of the pendulum, which has created a lot of opportunities for us who are trading and investing right now. I believe the market or the Fed's already behind the curve and they'll have no choice but to cut rates in December. Now again, I'm not here to predict and speculate as much as I'm here to follow trends and react, but sometimes the opportunities too big to not at least trickle in a bit of money into some of these opportunities. And then of course, if we're wrong and it goes the other way, we can dollar cost average in. And we're going to cover some of these positions right now. So what happened today? Why is the SPX down 1.6% and why is the NASDAQ down 2%? Well, the government reopened, which should have been really bullish news for the markets. But they also came out and said that they're not going to release the employment data for October. The government was dormant, people weren't working. They either didn't collect that data or maybe the data is so bad, who knows? Again, we don't want to speculate, but they said they don't have the data, they're not going to release it. And when you don't have data, that means uncertainty, and when you have uncertainty, the market reacts. The market is very, very sensitive right now because of some of those indicators that I mentioned about just the weakening market overall. So, if the Fed doesn't cut rates, that creates a stronger US dollar because rates are higher. If the Fed does cut rates, that creates a weaker US dollar. Lowering interest rates weakens the US dollar because holding it is less rewarding for investors, so they move their money elsewhere. It's also easier to borrow money or less expensive to borrow money at lower interest rates. So lower interest rates technically are very bullish for the economy. You inject money into the economy, people start putting their money in precious metals. Gold loves lower interest rates. Risk assets like stocks love lower interest rates, emerging markets, commodities, and so on. So right now the market is pricing in that we might not get that rate cut. I believe that we're closer to somewhere around 75% of a chance that we still will get that rate cut. So this is the opportunity that I'm seeing in the market. So the first thing we want to cover is the market did drop. Yes, it's scary. It's scary to watch some of your stocks come down. I know it sucks. At the same time, we're sitting in between that big red candle from last week. We have not broken above it. We have not broken below it. That is what we're watching for. If we break below this candle, then yes, all the bets are off. We should really start to think about, hedging some of our positions and or maybe exiting some of our positions. But we don't need to overreact yet. We're not there yet. If we break out above this candle, we're going to likely see another bull run and another rally here. So we're just being patient right now. When you look at gold at these levels, I bought in at gold down here. So for me, it's really hard to justify buying gold at these levels, but it's always good to buy gold for the long run. If you're in it for the long haul, if you're in it for the next 10 years and you want to start slowly accumulating some hard assets, which I truly believe in as an investor to get some of these assets, then yeah, you know what? Maybe now's the time to start trickling some money. We're a little below all-time highs. We could still see gold break 5,000 in the next, couple months here. Right now it's at 41.92. How I'm trading my gold is because I've made a lot on my gold, and if you have too, if you've made some money investing in gold, I've hedged it by buying put options on silver, because silver tends to be a little more reactive than gold. So if gold does drop, say 20%, silver might drop 40%, and so I've basically insured my gold by buying put options on silver. So if gold goes down, my silver put options go up in value, and if gold goes up, my put options on silver expire worthless, and I basically just paid for gold insurance. Here's a chart that is very interesting, Bitcoin. Whether you're already a holder of Bitcoin, whether you're interested in Bitcoin, or you want to get involved in Bitcoin, I'll tell you exactly what I'm seeing right now. So if you look at the orange line, the 50-day moving average, we've been bouncing off this 50-day moving average a number of times during this rally. We've not yet concretely broken below the 50-day moving average on the weekly chart. So right now, I know we're sitting below it. It looks really scary. What I would expect would happen is that we're going to go back up and we're going to retest this line. We're going to retest the 50-day moving average. We might get rejected, and that might put us in a downspin. We might get, it might go above the 50-day moving average, and we might get back in a rally here. And really, Bitcoin is pretty correlated with the rest of the market. I think it's like 60% correlated to the big tech stocks. So, we're going to watch Nvidia and Amazon and Meta, and if those things start to go up, Bitcoin will likely go up. It's pretty married into those stocks right now. So we're really looking for macro trends in the market. The long story short here is that if you have say you have $1,000 that you want to invest into Bitcoin right now at these levels, I would probably say you're probably good to invest about a third of that into Bitcoin. You can maybe put $350 in it at this level. You might be getting a great price on it if it does rally up right now. If it does drop down, you have 2/3 of your money still in your pocket that you can inject in at lower levels and dollar cost average into Bitcoin. But to put some of your portfolio in at this price, when I believe that the market has overreacted and that we're still likely going to see a rate cut, which should be bullish for the market, I think that this could be a really good zone to buy in. Now, you might want to be patient. You might want to see if we hit that 50-day moving average again and start to swing up from it. That could be your swing trade right there, is riding that momentum, so you don't have to just put money in tomorrow, but that chart that you should be watching if you're interested in Bitcoin. We'll cover my positions right now. So I made a $10,000 public portfolio last week that we're going to be trading on this channel. For those who have been following, I bought 50 stocks of Duolingo, and I bought 3 call options on Celsius. My last video, I cover in detail the income statements and why I believe Duolingo is a really good long-term investment, as well as a swing trade. So we're still holding my position here in Duolingo, and we're going to hold the Celsius position. I guess in the last week, we were up overall open profit and loss. We're up $9. So essentially nothing has moved in these positions in the last week. They've just been in a holding pattern. Duolingo's already been beat up very bad this year. I don't know how much lower it can go, but of course it can go lower if the market does dip and has a pullback. If we do see us dropping below that candle on the S&P 500 and we do close below it, we might see ourselves coming down to the 50-day moving average here. That could be a pullback of 10%, and you might see Duolingo also drop that same 10%. It might just follow the markets in that terms. But I'm willing to hold this for the long run regardless. I'm hoping this swings back up. So I'm going to basically stay strong in my positions right now. I'm not overreacting. I'm not panicking. I'm watching what the market does. And I do believe that there's more likely a chance we're going to get a rate cut, more than 52% here. I believe it's more about 75%, which is creating these opportunities in Bitcoin for us right now, which is creating some of these opportunities. I think another good buy would be Euro USD as the dollar weakens, if we do get that rate cut, the euro typically gets stronger because investors will move their money out of the USD into other assets like other currencies, other stocks, gold, and so on. And so you could see a rally here as well. So I don't really trade currencies that much, but maybe you're more familiar with trading currencies. There could be some opportunity in the euro USD. So that's really what I had today. The last big news I have is I want to share with you this. This is a 1 ounce 99.99% silver coin from it's called a maple from the Canadian Mint. When I get 25 subscribers, we're going to do a 1 ounce silver giveaway. This thing is worth right now $52 USD. In the future, who knows how much this thing could be worth. It's great to have on your desk as an investor. It's just a cool keepsake. So at 25 subs, I'm going to be giving that away. If you want to help me get there, what helps me get there is commenting on my videos. If you've learned anything, I'd love to hear from you on what you learned. If you don't want to share with me what you learned, you can even just type thumbs up in the comments. Like my videos, subscribe if you haven't already, and keep coming back for more. And then when we get to those 25 subs, I'll probably do a comment on this video, and whoever comments is in the draw. And who knows, there might be 5 comments. So you might be one of 5 people to win a 1 ounce silver coin. So we'll keep a pulse on that giveaway. As soon as we hit 25 subs, we'll give it away. Thanks for tuning in. Happy trading tomorrow in the market. Tomorrow's Friday, so I'm assuming we had a pretty big sell-off today. We might see a bit of a rally tomorrow, and then we'll always touch base over the weekend. And I have some ideas for some new content. I'll put it as well, and I'll keep you all posted. Thanks so much. Cheers.